Alright, hope everyone's doing well. So I wanted to make a video since I did not get to really talk much about always in. So this video is going to cover mainly always in. However, just as my last video, we've had a lot of trading range. Sorry about that screen. I'm fixing something on my screen, so ignore that. We've had a lot of trading range days, so I'm also going to talk more about limit orders and scalping. But with that said, if you're going to trade with limit orders, you got to be confident in what you're doing. So I would not advise people that are not confident in their reading of charts to trade limit orders. However, it's the best way for the most part on days like what you can see on the screen, which was Friday, June 17th. And while we're on that, make a note that this upcoming Wednesday, June the 19th, I believe, is the FOMC announcement. So Wednesday at 1 p.m. Central Time, 2 p.m. New York time, there's the FOMC meeting. So you don't want to be in the market. When there's an FOMC, typically I will not trade. I typically won't do anything 30 minutes into the 30 minutes before the report, and it's best to wait for a bar, at least 2 bars after the report. A lot of times when you get an FOMC day, let me see if I can pull one up. A lot of times you get, I've got a large list of if I can find it, a very large list of examples. Most are from Al, just through the years of the webinar. And so let me do this one. I'll do a bull. I don't know how that's going to work with this new trade station. I've still got to figure out bits and pieces. Yeah. But, here's one. Strong bull breakout, very deep pullback. And you can see the issue. If you buy this close, stop down here, you're dealing with a very deep pullback. So, and a lot of times when you get this, you get deep pullbacks. It's typically, you got to think what happened on the 1 minute chart. So you get a bull bar, second bull bar, and then bad follow through, and then you get an endless pullback. So you can see bulls bought this close, tried to get out of break even, sold off. And basically 3 pushes down, 1, pullback 2, pullback 3, or you can say 1, 2, and 3. Tight enough channel, first reversal that fails. 5 minute chart though, really what's important is to understand that, it is a big up, big down. So bears made money selling this high and scaling in, which means they'll make money selling here. Strong enough breakout, odds favor second leg. Strong enough, maybe you get a little more up, but odds favor sideways. Unfortunately, yeah, I was afraid of that. So I do not know. For those of you that are used to TradeStation, back in the day, I guess I could do this one at a time. Used to, you could pull up like 6 different workspaces. I could do this to this and pull all these up, and it would just pop up right here. But it doesn't do that. It doesn't do it anymore. Let me see. Try this one maybe. Here's a good example. So here's the 1 o'clock bar. And you think, bull breakout, probably going higher, big bear bar. Bad follow through, another big bear bar, bad follow through. 2 legs down, bottom of a trading range, the stops bar. So you may find it's micro double bottom of a trading range. You may find buyers, and we got, bulls. You can see bears sold the close, scaled in, went back to this price. formed a double bottom and rallied all the way up. Very tight channel, odds favor second leg, but you may need to stop all the way down here. Bears may make money selling this high. If they don't, it'll increase the fact that bulls are trapped, or bears are trapped. Bears trapped selling here, and got a measured move from this low to here going up. But really the whole point is you want to wait a bar or two. You may get a big bull bar and then a reversal. You may get a big bear bar and then a reversal. And most FOMC days go sideways. Even though this range is 71 to, it's about 4 points, it's just not worth doing anything. So now we're going to review this past week. And I don't know how to, let me see if I can figure this out. Again, this is a kind of a pain because I used to have it all set up with in the old trade station. Let's see if I could just, yeah, it took me forever to find my original chart. So let's go back to Monday. 617. Fix this real quick. You know, I will say I like the new trade station the more I use it, but there's little things that's kind of just a pain. And I get it, it's more tablet friendly or touchscreen friendly. It's more, it's the new trade station 10 feels like more of an app than a program. You got all these drop downs. So I don't know, I guess it's okay. That's kind of a pain. So here's, let's do it like this. So as you can see coming into the day, we had a gap up trading range. Let's fix the margins. There we go. Well, okay. It's coming into the day. Consecutive buy climax is sideways, so maybe we'll try and get trend resumption and an opening reversal. First bar of the day. Big bar. I want to gap up. 20% chance it's the low of the day. So if you buy above it, really not a great trade. I typically try not to take those trades. They're just not. I like more higher probability trades. So always in long above bar one, probably sellers above. But the problem with that is we could go a long ways up. So it's really not a great bar to sell above. It's you have the danger of this. This bar was a lot smaller, so it decreases the risk, which I think makes the trade a little better. This makes the risk bigger, and it's a low probability bet. So you have small risk on a low probability trade, great risk, great reward, as you can see here. Bigger risk on a lower probability trade, and this happened yesterday. 20% days, 20% of the time the first bar is the low of the day. So really, are you going to bet that you're going to get 2 consecutive days where the first bar is the low of the day? Probably not. And big bear bar, but big up, big down, gap up. Bulls may buy it. I still think we're going to fall below this low. Consecutive bear bars, but again, risk is big if you're selling stop up here, and your risk is limited. Your reward's probably limited. Probably buyers at this low for at least a scalp. And as you can see, bulls tried to get a double top here, bad follow through bar. It's a bad short below, so probably buyers below. Micro channel, 4 consecutive bull bars. Tight channel, but again, I still think sideways most likely. Really not that great buying. But it's tight channel, tight trading range as well. So we may be trying to form a small pullback bull trend. You can see we have a negative gap. So the low of this bar, the close of this bar, and the close of this bar, there's a gap. Even though we're closing the gap in terms of the tails, sorry about that. There's rain. There's a storm coming in, and it's kind of distracting me. But we have an open gap. All right, sorry about that. I had there's tornado warning. So let me get back to where I was. Okay. Adjust the screen. So again, gap up. Possible measuring gap, so maybe trying to form a small pullback bull trend. Outside up bar, possible gap, so maybe a measured move from here to here. Finally close the gap, probably sellers above. The problem you have here, this channel is really, really tight, so it lessens the chances of a strong sell-off. Plus you're right above the moving average, so probably support at the moving average. And you have to be careful. Even though the bears technically sold here, scaled in, made money, they sold here, made money, you may get a give up, which could be right here. And just like that, so this happens enough. Fix this. So you may get this. So this is why it's dangerous to be scaling in. If the bulls give up, we also have a wedge, 1, 2, 3. You can also say this is strong enough to reset the count, so 1, 2, 3. We're getting a bull breakout. In general, 50-50 chance it fails. Strong enough bull bar. This may be the strong enough bull bar, probably get a small second leg up. You have the small second leg, then you get a short, so 3 pushes, 1, 2, 3. Probably, I'd get out of shorts, I'd get out of longs below this bar. Aggressive bears can sell, but it's pretty aggressive. You can call it consecutive tops. Again, 1, 2, 3, bull breakout, 1, 2, but it's a micro channel ever since, somewhere down here. So not a great short. The traders that did sell, they probably use a wide stop and they'll be quick to get out. They may get out above this bear bar. Didn't trigger, so strong enough breakout, probably at least second leg down. We're at support, bottom of this bull bar. Odds favor we get below it. Since we rallied really strong above this bar, traders are going to want to wait and see. At this price, let me put it this way, at this price we raced up, so traders are wondering, are we going to race up again? And it looks like we're not going to, probably going to go sideways. However, I also don't think that we're going to just sell off. Tight enough channel, probably have to go sideways, just like here, pretty tight channel. Even though we sold off a lot, we had to go ultimately sideways. Sorry about that. I thought I paused the recording, had to type a message. So again, big up, big down, probably sideways. Strong enough breakout, probably always in short, but again, may get a really deep pullback. We may test the open of the day. It's also 50%, so we're pretty close to that. So I think we're going sideways. This is strong enough though, they'll probably get a second leg down. So I would not buy above it. Low one short, probably buyers above. We found the buyers. Second entry short, but again, bottom of a trading range, probably not going much lower. If I was long, I'm definitely get out of shorts though. I get out of longs. It's an aggressive short. But again, if you have a choice. What traders are wondering is this going to be a second leg trap in a rally up to the new high? So bulls buy the close, buy more lower. Are we going to have a 50% pullback and let them out break even? Or are we just going to have a spike and channel and test low of the day? I think we're going to test back up to here. But I'd get out of shorts. I'd get out of longs below this bar. I would not sell. And, pretty weak. So if if trader did sell, they're probably going to scalp out, which looks like what they're doing right here. 3 pushes, 1, 2, 3. So you can argue tight trading range, breakout mode, probably a final flag, bear breakout, outside down, probably a surprise bar and at least a little more down. However, the problem here is it is outside down, but you've got to wonder, it may be strong enough for second leg. And like I said, I think we're going to test the open of the day. So probably not a great buy above, so probably at least a little more down. Okay, we have the more down. New low of the day, probably buyers here and buying more here and lower. Tight channel, first up, probably fail. Low and short, probably buyers below, found buyers. So, decent rally, but again, big down, big up, probably trading range, probably testing this high and going sideways. This is not impressive. This is fairly impressive. The bars aren't big, but they're consecutive. And it's a micro channel. This, not impressive. We're getting a fairly tight channel. Big bear bar, probably buyers below, but again, what traders don't know is if this is a double top measure move. So will traders buy here? I think so, but I think a lot of always in bulls get out here and a few ticks below, so I'd wait to buy. I would assume this is the trading range and I'd want to buy somewhere down here. So bad follow through, second leg down, outside up. End of the day, bad for limit orders. Here we had a second leg down. So bulls wanted to buy a double bottom, higher low major trend reversal, second leg up to here. However, big bar outside up, big risk. So lowers the probability of bulls buying above. Bear bar closing on its low. It's a reasonable short if you're betting on a swing to a new low of the day and lower. But again, big risk, so not a great trade. New low below here, bulls bought more lower. Decent buy, but there's an issue. And the problem with the buy is it's a tight channel. It is a high 3, 1, 2, 3, so 3 pushes down, or reversal up, reversal up, reversal up. But again, tight channel. Late in the day, we're at 14.55, so much later than I thought. Probably going sideways. I just let it go and didn't even trigger. Always in, bulls buy probably this bar, and really no reason to get out. It didn't trigger here. I'd get out below this bar. Aggressive bears sell. They wait for 3 consecutive bear bars and sell. Really no reason to get out here. Maybe you get out above here, but if you do, you got to get short again. Probably stop somewhere up here. I would not put a stop above this bar. And probably exhaustion bar, odds favor second leg. I had to get out a few ticks above this bar or on the high of this bar and wait for a few legs up. A pretty aggressive buy. If you did buy, I would look to scalp out. Certainly get out below this bar or at least 4 ticks below or on the close of this bar. When you get a bull bar, doji, bull doji, bull doji, bull bar, bear bar, it's weak, so it's a leg in a trading range, testing into this gap, probably going to find sellers and go sideways. Big bear bar, but bad follow through. Odds favor maybe at least a little more down. It's a bad stop entry, so here you got called a low one short. I don't know. I probably wouldn't sell. It's just I'd rather look to buy lower. It's not really great always in trading, but if I do anything, I'd sell. Bulls, where do they get out? Maybe a few ticks above this bar. Not that great again. So I don't know. I'd probably get out a few ticks above this bar, and I wouldn't sell below. I'd just wait. So the next day, big bull bar, but again, top of a range. We had a lot of these, so we broke above the high yesterday here, and it was the high of the day. For it's kind of interesting. So Let me see if I can do it like this. So over here, bar 1 led to the high of the day, and we rallied quite a bit sideways. Here led to the high of the day, rallied for a few hours, sold off close to the low. Here we didn't. So again, now we have another gap up. Do I really think, I think we're going to do something less than this, and probably we won't even stay above this high for a couple hours. The bar's bigger, it's a bigger tail, so it's not really all that impressive. So probably sellers above, outside down. Big bear bar, odds favor at least a little more down. However, the risk is really big, therefore it's not a great short. That's 1 times your risk. 2 times your risk takes the low of the day, so it's probably, and you also have bulls buying here and buying more lower. And what happened here? Bulls bottomed to the close, so not a great buy. Bulls made money buying here and lower, so bulls are making money, which means it's probably not going to be a strong bear trend, probably going to lead to a leg in a trading range. Bad high to buy, second entry buy, big risk, big tail, and we may get a measure move down to this bar. So again, not really good stop entry, maybe here, but tight trading range, so lowers the probability of this second entry. So outside down bar, a little bit of a surprise. Probably going at least a little more lower. 2 legs down here, and what I mean by that is we have 1 leg, pull back, second leg. Doji, big bear bar, so bear bar, follow through bar, probably maybe going a little bit lower. But again, my issue is bulls made money buying this low. Big tail, bulls are going to make money buying this low. So do I really, even right here, we have a big tail. I think bulls will buy that low. We have another big tail here. So I think if I'm shorting, do I really think we're going to get a bear bar closing down here? Probably not. So if the bar is going down, I want to take profits. And better yet, if I could buy, I'd rather buy down here or down here. And that's what happened. So it's not a great stop entry buy, but limit order bulls are making money, so you have to be leery of the fact that we may get a reversal fairly soon. High to buy, again, small bar, kind of a tight trading range. You're at the target, the prior breakout point, not really a great trade. We tried to close the gap, in fact we did. So if I bought above here, I'd get out shorts below here, but again, bulls are making money below bars. I really don't want to sell in the bottom of this range at the moving average. Consecutive bear bars kind of changes things. You have to wonder, maybe a measured move from this high to here. I chose here because this may be tails and we may ignore this. I think this is more important. It's also the start of this strong breakout. So strong up breakout odds favor second leg. If anything, I would certainly wouldn't buy. If I bought this low and I got this bar, after 3 consecutive bars, I'm just going to take the loss. There's just too much risk to get a sharp sell-off. And if you're a limit order trader, it's kind of like here. If you're buying down here, you don't want to see this. You got to get out because you're going to take a huge loss. Odds favor second leg down. Doji. Another doji. So bulls are buying, they're buying and buying lower. But really, I think it's profit taking. So again, it's not a great stop entry buy. So if anything, I think there's going to be sellers above, but I also think bulls will close this gap. And you can see we're not closing the gap, so we may, in fact, get a measure move of this. I still think we're getting this first, but I would be leery. I'd be aware of this. Tight channel, big bear bar, follow through bar. Could be a double top and a measure move down. I'd be careful about buying. And then we get another big bear bar. Same thing, if I bought this low and I got this bar, I'd just get out. So we're at this target, probably at least a small second leg down, far below the target. So now I'm thinking we have this really obvious target here. Maybe we'll get to that. Consecutive sell climax is here. This may be strong enough to reset the count, so 1, 2, and 3. And this may again reset the count 1, 2. So we may need a small second leg here, or third leg, 1, 2, 3. You also have to be thinking, we're at that measure move target, and if this reset the count, maybe we'll get a measure move target to here, and that's not too much further. I don't think we'll get there. We might, but we'll see. So now we're at this target, finding sellers, so we won't probably going to get a second leg down and get down to here. It's an obvious target from this open to this close. Okay, we're at the target, so there's no way I'd buy down. There's no way I'd sell down here. You know, especially after this 1, 2, 3. We're getting very climactic. I wouldn't buy it though. So we'll see. Will bulls make money here? Okay, they made money. So that changes things. Consecutive sell climaxes. We had 3 pushes down. So we had a wedge, 1, 2, 3, and a bear breakout. And by the way, also, since we have a bear breakout, we probably won't get that. Wedge, 3 pushes down, 1, 2, 3. Bear breakout of a wedge. So in general, 50-50 chance you get a second entry, and so you get 4 pushes down, 1, 2, 3. Failed breakout of a wedge and a reversal up. When you get this stronger breakout, it's higher probability you're going to get 2 legs down and possibly a measured move of this opening range. And you know, arguably you did. You know, maybe it was to here. Maybe if you ignore the tails. You know, the thing with measured moves is you have to be a little flexible. So you got to kind of understand what's going on. We may be ignoring this tail and ignoring this tail and just have a, you know, something like this. Or, you know, something like that. Fix it a little bit, there we go. Something kind of similar to that. But, you know, don't get too bogged up, don't get too caught up in that. What's more important is, okay, strong bear breakout, may get 2 more pushes down. Bears made money clearly by buying this low and lower, which means trading range. They'll buy down here and buy in the bottom third, sell in the top third. Very climactic, so I really wouldn't look to sell for at least a few bars. Okay, so strong breakout, closing gaps. Strong enough breakout, tight channel, so first up's minor. We'll probably get a second leg after any pullback, but I wouldn't buy up here. Probably going to find sellers soon. We've got our shorts below that bar, and we sold off sharply, so the bulls are hoping for a measured move. They're hoping for a channel, so breakout, pullback 50% and a second leg, but this is pretty strong. May get first up, may fail. What's going on, and we're starting to go sideways into the close. So what happened here? Well, let me first do always then. Bear bar, first thing I would do, I don't know, I probably wouldn't sell. I wouldn't buy above it, too much risk. Stop down here. You can buy above that stop down there, but risk is low, and the probability is not great, tight trading range. So maybe, I don't know, maybe the first trade I would sell is here. Bulls are making money below, and I don't know, I probably wouldn't sell this close. I'd be more interested in buying down here for a scalp. So, you know, maybe selling this close or selling below here, or 3 consecutive bear bars, selling this close, betting on a second leg down. And if you sold here, you can get out, but you gotta get short again. If you're selling here, I don't think it's a great place to. I wouldn't buy back necessarily. This is strong enough you'll get a second leg, so really not a great place to buy back shorts. And again, same thing here. If I did sell, I'd sell again. The problem with buying back shorts with always in, when you get a channel, here's the problem. Bulls are, in essence, bulls are buying below bars. Bears are buying back shorts below bars. Bulls are selling out of longs above bars. Bears are selling into shorts above bars. So if you're trading always in, you're kind of doing the opposite at times, especially in a tight channel. You get a new breakout, so it's clearly always in short, and you know you're going to have profit taking in some bulls buying, but mostly with limit orders. So if you're buying here and selling down here, you're just kind of getting, it's just not a great thing. And the reason for that is it's a bad stop entry buy, which means it's a bad place to buy back shorts. It's a bad stop entry short below bars. So, and again, you can, I think, I just really wouldn't do it here. That's so strong that you're probably going to have at least second leg, and this is probably not the low of the day, which means we're probably going below it, so it makes more sense just to stay short. Strong bear breakout, odds favor second leg. So again, I wouldn't get out here. If I did, I'd get short again. Maybe I wouldn't get out of shorts out here either. Maybe above this bar, but not really all that great. I would definitely get out of shorts above this bar right here, or above here, and maybe aggressive bulls buy here or closes up here. Strong breakout, I get out second entry short. Bear starts selling somewhere in here, and bulls, tight trading range, bulls are making money below bars at the bottom of a range, so not all that great of a place to be short. And then sideways into the close. So here, really bad stop entry trading. Here's the open, here's the close. So it's just, I would not be trading always in here. If I had to do anything, I'd probably buy above bar one, stop below, scalp out. There's going to be sellers up here, so if you're smart, you sell as this bar's going up. You sell this close, sell above. You sell 1 point higher, 2 points higher, outside down. You buy below bars. I wouldn't necessarily buy below here. This is probably strong enough for a second leg. However, I think we're going below this bar, so not really a great place to be buying. Bears, buying in the middle of a tight trading range, not that great of a place. So if bulls bought and they scalped out, it's not a great thing. It's not a great place to buy. So think about the logic. You buy here, stop down here, and you get a doji, so you're disappointed. What do? You try to set your limit order. You set a limit order at break even to get out. So your entry is 90.0, one tick above 89.75. You're disappointed. The high of this bar went to 90.0, so it touched your entry price, turned down. And the reason for that is so many traders were disappointed that they got out below their entry. So big bear bar, but bottom of a range, probably surprised, probably going at least a little bit lower. So, you could sell. I would not. Higher probability to sell above here. Bulls will buy below bars. So they'll look at this and say, yeah, we're falling to the middle of the day, but sorry, I keep yawning. We're falling below middle of the day, but nothing special. So probably buyers below. And bulls made money. Big down, big up, probably sideways, bad follow through, second leg up, bad follow through. And there's so many limit order trades, buying below bars, buying here, selling above here, it's a bad stop entry, selling more higher, selling this close, selling more higher, selling above this bar. I mean, you could even buy, I wouldn't buy there, but you can buy below here, buy below this bar. Strong enough breakout odds favor second leg. You can buy above here and buy more lower, get out of break even. You can sell above and get out below this bar. I wouldn't do that because the signal bar closed on its high. You can buy this low and lower. You can sell here for a scalp. You can sell here, scale in, and get out of break even. You could buy here and buy more lower and get out break even. You could buy this low, strong bear bar, odds favor second leg, and you could buy more lower, get out of break even. Low one, you could buy, make money. Low two, but bad signal bar, you could buy, make money. Bulls could buy here, buy more lower, and you clearly make money. And one thing about that, one of my kind of theories with bad signal bars in trading ranges is I think traders care less about buying above the bar. And if you think about it, they want to minimize risk. If you're looking to look right here, bad signal bar but led to 2 legs. Well, if I'm thinking to myself, okay, I want to buy, I'm probably, a lot of traders are going to front run, so they're going to buy this low, scalp out as it goes up. Some traders will buy here, and as the bar gets too big, they'll take the profit. So if you think about it, you may buy this low and say, okay, if it closes as a bull bar, kind of like this, hypothetically on its high, and doesn't get too big in terms of the prior bar here, you may hold long and, for a swing. However, since you can buy again, a lot of traders will buy, scalp out, and if it looks like a bull bar, they'll buy and scalp out again. Traders mainly are buying the close of this bar because they know the bar is going to trigger. They know it's a trading range and signal bars don't look great, so why not just buy the close instead of buying above here? You get, a couple ticks better for price. 2 legs up, top of the trading range, so sellers above. And, it's a wedge top, 1, 2, 3 with the double top. Probably, sellers for a scalp, sellers above the bar. We may come down to this low, but you may need a second entry. There's your second entry. Disappointed bulls buy this close. Disappointed, get out break even. Second entry short, probably stop up here. But again, if we go up here, probably sellers, so not really a great place to buy back your shorts. Tight trading range, new low. So trying to get a bear break out of a double bottom. Probably going to form a wedge and, failed break out of a double bottom and get a higher low, but may go lower. Bad follow through, probably at least a small second leg down. Fairly tight trading range, so it's, again, not that great. You can see what happened. Bulls buy, they're hopeful that we get a strong breakout like this over here, but we don't. We get a doji, so bulls just disappointed, buy back their shorts, are still out of their longs. Double top, so may get a bear breakout measure move. Never looks like it though, but sometimes it happens. And really just tight trading range. Sorry about that, and I really don't want to talk much about this day. It gets tiring. Overall, the main goal, buying the bottom third, selling the top third. I'll do one more day. I'm getting pretty tired. Comment if you have any questions. But this gets tiring, just talking about each day. Okay, so over here, just a little tidbit. Whenever you get a bar, there's sellers above it. However, on the open, the risk of a strong rally is much higher. So it's dangerous to sell here. You may realistically need to stop somewhere up here. So if you did sell, here's where I'm getting at. How do you manage it? Do you sell here and you see this bar and say, oh, well, we're probably going to close the gap? Well, then you get this, and you get 2 consecutive bars, but you get a, move up, move down, move up, move down, move up, maybe a parabolic wedge. So you went up, basically down and up, down and up, and now you're going down. So if you sell here, you'll make money. Odds are you will, but you don't know, you may need to stop all the way up here. So typically, better to wait for a few bars before trading with limit orders and just see what you get. First, always in trade, probably, bears, maybe they'll sell here. Higher probability to sell below 2 consecutive bear bars. 20% chance this is the low of the day. By the way, always in here. And I think I've already talked about that. So again, bear sell here. So basically an outside down bar, probably going lower, but we'll see. Okay, big bear bar, but the problem is you fell below the target. Bulls are probably going to make money below, and big tail. So bulls are going to buy, betting that we'll close this gap at the trading rate, at the moving average, couldn't close below it. So you always have to think this may be a kind of a second leg trap. It's a double bottom here and here, and may get an endless pullback. I don't think we will. I think we'll get a second leg down, especially with that tail, but it may go deeper than what traders want, just like this. So now we have a double bottom, but big down, big up, big down. So 3 pushes, 1, 2, 3, so it's a wedge. Not a great stop entry short, but bulls, they made money buying this low. buying more lower. So we'll probably come back to here. So it's probably a trading range. But it went lower than what people want, and that's the problem with trading ranges. So if a bull buys this close, buy more lower, they get out right here. Strong enough breakout, probably have a second leg down. So that's my point with wide stops. If you're buying here, you're going to get stopped out if you put a stop here. So you may need to stop all the way down here. And you're really better off buying lower. All right, so I've got to wrap it up. But the main thing with days like today, typically on a trading range, you go further down than you want to go. So consecutive bear bars, you get a second leg down. Micro double bottom, but you get the second leg down. You rally, you go further down than you want, and then you get the second leg up. And the main thing to look at is when you have big trend days, what you're going to notice is you're going to see some sort of something strong. So, and I'm going to just here's a good example. Bull bar, it just keeps going up, and the odds are of this reversing is just tiny. So, it's just kind of one of those things where you could buy this close, and you could literally, most of the time, just say 70% of the time, you could buy, put a stop down here, and come back in like 4 hours. And look what happened. Now granted, one thing to talk about with this is when you get this strong of a rally, you're going to get several pushes up. You're going to pull back and keep channeling. But eventually, this is so strong, it's kind of like this. It's kind of like if you got to think about the average daily range of a day. So if you're buying in the markets up here, the opening range is already 63 to 79 points. So let's just say even right here, 63 to 77. So that means the range is 14 points already. So what do you expect? Okay. If we double in range, now we're at 28 points. Okay. And if we go a little bit higher, let's say 30 points. So let's say if this is 28 points, let's just say here, it's real simple. 63, 93. So here's a 30-point range from this high to this low. Do you really think we're going to go, are we going to have a 40-point range, a 50-point range? No, probably not. Let's look at the prior day. This low open, from this low, this bar was let's just call it 820, so 20. This range is 65. So here's a 40-point range, okay. Right here, 25-point range, 55-point range, so 30-point range. So you may not go that much higher. Plus, this is exhaustive, and bulls are going to take profits when they see that, and they're going to look to buy lower. When they see that, they say, I may get a second leg down. Make it another second leg down. And that's that. So anyways, when you see this, you have a much higher probability of going higher. When you see this, tails, bull bar, tails, bear bars, tails, consecutive bull bars, but then you get that. So what I'm trying to really say is look for days, when you have a trading range, take the past few days, find 2 consecutive really strong trend bars. And I get the argument, you could say this bear bar and this, but this is not really, to me, this is strong, but it's not great. It's disappointing. And the reason for that is your bears are buying back shorts into the close. Just like here, big bar, but bulls sold out of shorts, sold out of longs into the close. So big outside up bar, bad follow through. Big bear bar, but tail. Another bar, tail. Big bear bar, bad follow through. Big outside down bar, terrible follow through. Big bull bar, bad follow through. Here, maybe that's a decent bull bar, but it's, kind of within this range. Big bull bar, you could say that's good follow through. I don't really think it is. The body's small compared to this, then you get bad follow through. Big bear bar, another big bear bar, but then look what happened in the next bar. Terrible follow through. 3 consecutive bull bars here, but you break above the range, terrible follow through. Big bear bar, terrible follow through. Big bull bar, bad follow through. Big bull bar, bad follow through. Big bull, bull bars, but top of the range, terrible follow through. So anyways, with trading range days, buy at the bottom, sell at the top. Everybody knows that. I'd be careful with limit orders. I'm going to start discussing more limit orders, but I really want everyone to focus on always in. Unless you're really confident with always in, be careful with limit orders. Until you understand why this bar, what's happening right here. Well, one thing you have to be aware of is, okay, sure, bull bar, it failed because you have a strong gap. Odds favor test the moving average, and again, 20% of the time, this is the low of the day. So what about here? Big gap, bad follow through on this first. Well, good follow through on this first bar. Why don't we fall below this bar? Well, this risk is huge. When you have a risk that's just this big, so if you're buying here and putting your stop here, you're risking a lot of money in terms of average bars on the first bar of the day. Therefore, your rewards probably, realistically, it's just not great. Sure, you made twice your risk if you held until the end of the day. But with that said, that means you have decent probability. Here, if you buy here, 1 times your risk, 2 times your risk, maybe 3 times your risk, 3 times your risk. It's just not great. But until you can understand what's happening right here, well, what are we doing right here? What is going on here? Well, bull spot, scaled in lower, could not make money. Strong enough breakout that would make it a second leg down. So bulls bought this low, made money, 3 consecutive bear bars. So bulls, if they're buying this low and they get this strong bear close, a lot of bulls are just going to buy back their shorts. Excuse me, I keep getting that backwards, so I don't know why. If a lot of bulls buy here and they see this, they're going to sell out of their longs, maybe take a small loss, maybe break even, and look to buy more lower because the odds favor a second leg down after this strong of a sell-off. But since bulls are making money, bears become less and less confident that new lows are going to go far. So if you see this and you say, oh wow, we went 4 points or 6 points below the low of bar 1, and I get it, it's probably 6 to 8 points. And then you see we went below here, went a little bit lower, bulls made money. If you're a bear, you're going to say, okay, if we went 4 points below this low, I'm going to set a limit order to buy back my shorts 2 points below the low, and then you'll buy back your shorts down here. Bulls will buy to get long and scalp out, and bears will sell pullbacks. But anyways, bulls are making money below bars. Odds are will enter a trading range, but you get a double top, and realistically, this could happen. So until you understand, there's just a lot to talk about right in here. So until you really understand the overall, what's going on overall here, I would not be so aggressive. I wouldn't trade limit orders. I just wouldn't. So anyways, I'm going to make plenty of videos over limit order trading, always in. But this one I've got in this video, so hope this helps.